Well, for more analysis, I'm joined by James Shugg, economist at Westpac Banking Corporation. James, thank you so much for coming in.
My pleasure.
Now, you think that this is a good indicator, but actually not as much as people think.
Well, ultimately, yes, payrolls is an excellent indicator of the US labour market because it actually is a universe count of everyone who has a job, or of how many jobs there are based on tax records and so on. But that's when you get the final number. This first print of payrolls for December could be hundreds of thousands away in terms of the movement from November, in terms of what we're ultimately going to see when the numbers are finalised. It's actually a very inaccurate indicator. The first print, the subsequent revision, the third, you have to wait for about a year until you're really comfortable you've had the right picture of the labour market. It's an important indicator for markets, but it is an inaccurate one.
But what does it mean for investors then? Should they brush it aside if we have a particularly
No, of course they shouldn't, because everyone looks at it.
Yeah.
You know, it's the mentality of herds, I suppose. And you know, the media has certainly pushed the number. Unemployment is a critical issue. It's just that this particular measure of the labour market
is not as accurate as it could be. James, what are you expecting from today?
Well, we did our forecast before I went on holidays 4 weeks ago, and we were looking for a 100,000 increase, and it's pretty much at the bottom end of the range, but with an upward revision to that very weak November number. We certainly don't believe, as for example ADP is telling us, that the labour market at the end of 2010 was putting on more jobs than at any other point in the last decade. You know, ADP had a very strong outcome. I suspect that might be related to like catch-up. For much of this year, much of 2010, sorry, ADP was underperforming. The payroll has changed by 20,000 or even 100,000 a month. Maybe now it's going for a period of outperformance. And even if we were to get a stonkingly strong payrolls number, I'd be pretty suspicious about it.
And we actually had a little bit of prudence from the Fed this week saying that, hold on guys, we're on trend for a recovery, but we're not ready to take away any of that extra stimulus. Would you be prudent?
Well, look, I think the only reason the US economy is actually putting on these sorts of decent numbers is because there's so much policy being thrown at it. And of course, what's happening this year, even with the extended income tax cuts, fiscal policy overall is still going to be a drag on the economy, particularly when you look at what's happening in the state and local governments, which, you know, are cutting spending because they can't run budget deficits. Go on.
Are we going to have these extra stimulus for the whole year?
Look, that's going to be the ongoing debate in Congress. But there is a legitimate debate about just how effective further fiscal stimulus can be, because people will say, well, our budget deficit's so high, there'll just be further higher taxes down the track, so I'll save more. So it can be counterproductive. Monetary policy on hold for a long time.
A long time. James, thank you so much. James Shugg there. Well,